Hello, my name is Lanny Cohen, and on today's video, we're going to be discussing hedging soybeans with futures and options, hedging strategies for the soybean market. Before we get started, I need to address that there are risks involved in trading futures. So if you're contemplating trading, please pay particular attention to the disclaimer below. Okay, so our website, ccstrade.com. Let's start out. We'll go to quotes and charts, historical futures, historical charts, and as you can see, we've got all the historical charts listed, but for today's example, let's look at soybeans. Okay, so if you click the link, then the current contract comes up, but let's just look at last year so we can look at a real example of what would have occurred. So if you click on November soybeans of 2016, you'll come up with a chart, and I'll cover all the aspects of what you could potentially do. So okay, so it's the beginning of the year, January. Prices are down to below $9 down here. Okay, so prices aren't so good, but here in early April, they pop up to $9.33. And then in early May, they get as high as $10.06. So what are your options here? Okay, you know you're going to grow, let's say, 50,000 bushels of beans. Okay, so what can you do? You could start selling futures at any one of these levels. Let's say you sell futures at $10. I'm not a big fan of using futures, by the way, and I'll get into that later. But let's say you sell 50,000 bushels of worth of futures, 10 contracts, at $10. Okay, what that does, you may be happy with that price at $10, but it totally removes any upside potential that you might have. So opportunity is lost with that strategy. And by the way, that strategy is the exact same with forward contracting. If you forward contract, you might as well be selling futures. It removes all the upside potential. So let's see what happened. If you sold the 10 futures at $10, it runs up to $10.70 here in early June, and then eventually gets up to $11.80. Okay, so if you sold them at 10, you're going to be subject to margin calls. If you sold 10 contracts at 10 and it goes to $11.80, that's almost $10,000 a contract. You know, on 10 contracts, you have a $100,000 potential margin, a $100,000 loss. So that's why I don't like to use futures contracts and forward contracting. So what alternatives do you have? Well, you could use put options. Let's say when beans were at $10, you purchased some November put options. Okay, you know, if you buy 10 of those, you know, if they're at the money, it's going to cost you a couple $1,000s per option. So that automatically lowers your protection to $8 from 10 after you pay $2 for. Oh no, that's not necessary. It'll cost you at least $2,000, which is about 40 cents worth, which is certainly a way to do it. You could do that and you can walk away from it, okay? But then you still are not capitalizing on this potential rally. I developed a strategy where I call it the scale-in strategy, where I wait for a certain percentage of a rally, then I start the strategy, I put on a set number of put options staggered, and then I scale in buying more puts until they won't let me buy them every 25 to 50 cents it goes up. So in this case, if we would have sold them if we would have started our strategy at 10 and bought a set number of puts, out of the money puts, by the way, and then bought them every 25 cents we went up, we would have bought another set all the way up to 1180, and we would have bought some close to the top, some puts, and then as what typically happens, we come down into harvest time. And the last put that you bought close to the top is going to make the fastest money, which is the one we're going to sell first. And I've been doing this strategy for a number of years, so I'll be more than glad to elaborate and explain it to you if you'd like to contact me. So thank you. I hope you found this informing. There is one more item. So let's say you do the strategy, you liquidate them at harvest time, and then you don't want to sell till January. So for tax reasons, so you sit on the crop that you have, and then come January, you have it stored. You have it in storage. Okay, so I'm against storage. I don't like storage at all. You tie up a lot of money. You have to insure it, and you get erosion. So what can you do instead? Again, you can use futures contract. You could sell what's in storage and buy it on the board with futures contracts. But that's the same as storing it. You've got risks involved. Yeah, you can put a stop in. It does lighten up. It frees up all the money. Okay, and you won't lose the erosion or you don't have to pay insurance. But I don't like that strategy because then you have to make a decision. You got to put a stop in. You have to decide where you'll pull the plug. It's still better than storage because it's easier to get in and out. But I've got some other elaborate, fairly not really elaborate, but they're spread strategies that I utilized this year in January, the beginning of January. I think the price was let's just look here, January. The price was about 1030. Okay, and one of my clients, we sold his crop, and we put on a strategy where we bought an at-the-money put, we sold a call above, and we sold a put below. If it wasn't right at the money, we could have done it for even. But because it was right at the money, it cost, I believe, 16 cents, $800, protected him from there. He held on to some of his soybeans in the bin, and now what's he looking at? Okay, he saved, so far we're at 942, so he saved 60 plus 30, he saved 80 cents. He's losing 80 cents on his beans in the bin. He saved 80 cents with me. So now it's like he's long from this 940 level. Does it sound confusing? It might be a little confusing in this video, but if you'd like to call me, I'll be more than glad to go over it with you. I've also compiled a list of 10 trading rules that over my 35-year trading career, that if you click the link below, I'll provide them to you, no charge. We also offer a free trial we have a lot of resources. I write a blog. We have historical charts, seasonal charts, spread charts, live streaming quotes and charts, any time period, full technical analysis. Our research is certainly worth looking at. We give trade recommendations and fundamental research as well. Thank you very much. I hope you found this beneficial.